Threats of a stock market crash, recession fears, and higher interest rates are driving consumers to purchase annuities. If you have any tax-deferred retirement account and you want to protect your investment from significant losses in a market crash, you can roll it over into an indexed annuity with no tax consequences whatsoever. Indexed annuities have a 0% floor, so you can never lose money. They also have 0 fees. Because I was declined for an IUL, Index Universal Life Insurance, due to my medical history, I chose to put my money into an indexed annuity because of that floor. I spent months researching annuity indexes in my spare time, and in those months I could not in good conscience recommend a particular indexed annuity until just recently. I ran this illustration on myself because this is the exact annuity I am putting my money into. Annuities are sold by life insurance companies. In this case, the life insurance carrier is F&G, which stands for Fidelity and Guarantee Life Insurance Company. F&G was established in 1959, is headquartered in Des Moines, Iowa, and part of the Fidelity National Financial family of companies, which is a Fortune 500 company. F&G is rated highly with these third-party rating agencies, and they have a Comdex score of 85, which means the insurer is in the top 15th percentile or rated superior to 84% of life insurance companies. The product is F&G's Accumulator Plus, where you can choose either a 7-year surrender period or a 10-year surrender period. This is a flexible premium, fixed indexed deferred annuity. Flexible premium, meaning you can transfer assets in one lump sum and be done, or you can make a series of payments. Fixed indexed, meaning the growth of your money is based on the movement of an index. Deferred means you are deferring taking an income to the future. A lot of agents will put an income rider on an indexed annuity, but income annuity rates change weekly. So who's to say once the surrender period is over that F&G would be the best choice for an income annuity? Without any riders, indexed annuities have no fees. An index product is all about the index, how it performs, and what it guarantees. In searching for an annuity for myself, I was looking for the following: volatility-controlled index, rebalance daily, high participation rate guaranteed at 100%, and index performance. I chose 2 indexes at 50% each, and the pie colors correspond with the index colors to the left. The Barclays Trailblazer Sector 5 Index is a 2-year point-to-point. The GS Global Factor Index is also a 2-year point-to-point, which means you are credited interest once every 2 years or every other year. They are both volatility control indexes that are rebalanced daily as opposed to monthly or annually. Barclays has a 280% participation rate, and the GS Global Factor has a 305% participation rate, which means however much the index goes up, you would be credited 280% of any gain in the Barclays Index and 305% of any gain in the GS Global Factor Index. Both participation rates are guaranteed at 100%, so worst case scenario, you are guaranteed to receive no less than 100% of any gain in the index. The guaranteed rates means what they guarantee, and that is 0% interest for every year. Your assets are protected, so this is the 0% floor they guarantee. You will never lose money. We are interested in the current rates, or the non-guaranteed values. The percentages you see in the account value interest crediting rate column are how the indexes credited interest over the past 10 years. And those are repeated every 10 years in the illustration. Remember, this is not a guarantee of future performance. The reason you see zeros is because these indexes credit interest once every 2 years. So in year 1, you would not be credited interest. In this example, I am rolling over an old 401k with a $150,000 balance. Now, when you purchase an annuity, you are signing a contract. One of the things you are agreeing to is the length of the surrender period. In this case, it is a 10-year surrender period. So in year 11, you can see your account value and your surrender value are the same. There's also a 7-year surrender period product, but the participation rates are just a tad lower. So in this case, you agree to the fact that you were in this annuity for 10 years. And if you want to get out of your contract before that 10 years is up, you will pay a surrender charge. So the surrender value column is what you would get back if you wanted to get out of your annuity early. The minimum guaranteed surrender value column is the minimum you would receive if you surrendered your policy in full after the application of surrender charges and market value adjustments, if any. There are exceptions to the surrender period, and they are: you require home health care service as a result of not being able to perform 2 out of the 6 activities of daily living. And those are eating, bathing, dressing, toileting, continence, and transferring, which means, for example, transferring from the toilet, chair, or bed to a walker or wheelchair. You are confined to a nursing home for at least 60 consecutive days. You are diagnosed with a terminal illness with 2 years or less to live. This is the surrender value schedule. You can see if you wanted to get out of your policy in year 1, your surrender charge would be 9% of your account value, whereas in year 10, it would only be 1%. The death benefit column is simply the account value and what your beneficiary would receive if you were to pass away. With an indexed annuity, you have no access to your money in year 1. But in years 2 through 10, you have access to up to 10% of your account value. If you access funds and you are under the age of 59 and a half, you would not only have to pay income taxes on the gains, but you would have to pay the additional 10% IRS penalty. After the surrender period is over, you have access to 100% of your account value. Index performance is very important. You will want to pause this video now to view the most recent low and high index crediting and performance for Barclays and GS Global Factor indexes. And this is the performance from 2012 to 2021. If you are interested in rolling over your tax-deferred retirement account into this indexed annuity, please see the link below and let's get your account protected from market losses.